This is Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with your closing grain and livestock comments for September 1st, 2015. Corn market, December down 6 1/4, 369 on the close. March corn down 6. November soybeans down 13 1/2, 874 on the close. January down 13 1/2. October meal down 310, 310.50 on the close. December Chicago wheat up 1 1/4, 486 1/4 on the close. December Minneapolis wheat down 3 1/4, 511 1/4 on the close. And December Kansas City wheat down 5 1/2 at 482 1/4. Negative tone here. Outside markets down hard. Stock market down nearly 400 points. Crude oil down nearly $4, and that had the overall scope of the markets weaker today, targeting those lows that we're forecasting here over the next 3 to 4 weeks of harvest lows, down around 350 in corn and around that 840 to 850 level in the November soybeans. We'll see if we can attain those. We do think that we'll chop around here a bit as we work towards those lower ends, but really lack any catalysts to get up and get going. Where that might change is in the September 11th report. We've got some people traveling out east right now that are indicating the corn's a little uneven. The beans look pretty uniform over there. So if there's a market to be watching as to our first indicator of bottoming, it's probably going to be the corn market, if not the wheat before that, which is kind of wrapping up harvest now and has more of a focal point of what El Nino means to weather events. Under the El Nino environment, it should mean a little warmer winter. Some drought concerns could develop. Australia, South Africa, Argentina to some degree, and then back into China again next year. So we're going to need to watch the developments of this. Overall, the tone is going to be a little bit of an edginess as a result of El Nino, but right now we've got so much inventory of crop. One thing I do want to mention on those inventory of crops, a lot of our corn and wheat world carryover is tied up in China, and the likelihood of that corn or wheat moving anytime too soon is somewhat limited. But overall, we still got big carryovers, and that means a little lower trends in the near term until either managed money sees an interest to buy this market, or that we see something else come along like a crop problem or weather threat somewhere else around the world. El Nino will tend to support prices to some degree, but we need to get some problems to develop first in order to see that materialize, or demand to occur as well. As we look at the feeder cattle market today, down 257 1/2, 195.30 on the October feeders. October live cattle down $2, 141.12 1/2. So the cattle just give and take. We get a couple buck rally and we take it right back, and that seems to be the trend with a lower long-term outlook here in the cattle market, especially if we're going to see a weak economic development working ahead here. The hogs chopping around here in the range, traded lower, traded higher, and finished around steady on the day, up 7 1/2, 0.075 at 68.10 on the close. Hog market seeing reasonable numbers around, good slaughter pace, and that's just keeping somewhat of a choppy atmosphere around that hogs, and that's kind of what we see for the foreseeable future. One thing to watch here a little bit, though, is as we work into first quarter of next year, we've had China liquidate a good number of hogs in their marketplace. So if China can stand back up economically, that could bring some potential buying interest back to that hog market, but that's some time off, and we already have some carries built into the market out there in the deferred prices. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results.